PPI is out and the market is still in a range. We'll talk PPI right now. Looking at the numbers, let's go ahead and jump into the numbers right now. PPI coming in right here. Core PPI less than forecast, 0.2% versus the 0.3% estimate there on the month-over-month core PPI number. Previous revised to 0.4%. Not sure if that was raised or lowered. I need to go back for that one real quickly and see. But right here, PPI number month over month 0.0% versus a 0.2% forecast, previous revised as well to negative 0.1%. So this right now coming in very, very dovish for the most part here. It shows right now that labor's cooling, CPI cooling, PPI cooling, and at the moment, so is oil. So let's get to the charts and what this means moving forward. By the way, good morning, everyone. Good to see you all today. I see Dale in the house here, as well as Prasood, Ashish as well. Good to see you all. Also, looking right now at these markets here, one thing you'll notice is massive expansion and a huge stretch in the data set. And because that was a historical data set stretch, historical, if you're looking at least a year back or longer, it was the biggest stretch in the data over that period of time. Now, over the last several days, we've seen a historical compression of range. 1, 2, 3, 4, 5, 6, 7 days. We can come over here, make this a 7-day compression here. And you'll notice right here that this is in the bottom 0.4 percentile of the data set over the last year, which means over the last year, this is basically the second smallest range probably, right? That last 0.4% is probably one other data point. If we were to make this, instead of offering this day and just going here, I mean, it compresses it even more. So you go to 6 days, and now it's still in the bottom 0.4%. So very, very compressed. And when you look at the data set here, 27% of average. So that's what you would expect sometimes when you get such a massive stretch one way, especially when it was so bullish, that the expectation on this Wednesday wasn't that we were going to snap back in all likelihood. Instead, we could form a range. That day, it could turn into a 2-day range, and then that sets the edges for the rest of the week. So our idea last week on a Wednesday was exactly right. First day back from a trip, and that was it. Plane trade there was the biggest day. Plane trade there was the biggest day as well, as I left and came back. Now major compression, and it's building energy now for the next breakout move. I tried to temper expectations here in our trading room because you can definitely see the energy here. There's massive energy, and I'll get to the lower time frames here in a moment. But if you get up into, say, the weekly time frame, you're seeing some very, very bullish behavior here with historical compression, and you can certainly see the writing on the wall for major expansion up ahead. Is it going to be up as we see the next several weeks up, or as we head into the really, really thick part of summertime trading, do we go flat here and just kind of die into the end of August? This market has been back and forth up here during the last several months, so it hasn't really shown an intensity or a want to see expansion lately. This was it, and it was just a handful of sessions, and since then we're spending 6-7 days sideways in one of the most historical narrow ranges. So you can definitely see the energy is building. It is significant. When you look again at a 7-day reading here, your average range would be 344 points. That would be average on your 10-period basis. If you're going based on volume weighted and the fast averages, you're looking at about 290, 285. Right now we're at 96 total points. So there is significant compression here. Which way do we go? Do we see expansion this week or is it next week? Sometimes, as we know in our trading room, I usually say if we get a compression day early in the session and it kind of builds out compression throughout the morning, I almost want that compression to continue throughout the day so that the next day may be a high expansion opportunity. In this case, to have such compression over the course of the week, you almost want this thing to finish the week narrow. Even if we got a little bit upside on both sides, it's still going to be narrow. And then the next week could be a tremendous breakout opportunity. Or do we get 2 weeks back to back of compression before the next expansion phase? Expansion is coming. We cannot stay within this narrow of range for too long before it has to see some sort of movement. And then it becomes about which way is the most likely direction. I've noted before that we have a bit of a sloping range, so we could easily see this type of move first and then go back to new highs this way. If we want to go gung-ho and break through 7,800 right away, then 8,000 could be next. Any pullback follows you into 8,200. So we'll talk more about that as we get into a spot here where expansion begins to be seen. Okay, let's take a look at I want to take a look at some of these other markets here, and then we'll jump into the lower time frames here in a moment. One thing with regards to crude oil, with CPI, PPI, labor all cooling here, and then you have a bit of energy cooling off of the recent highs, but not necessarily cooling tremendously, but still it's lower today, 2.25%, near the 81 level. And this is after trading over the 84s. Remember, back here, we had a 10-point target. 10-point target. Which way was it going to go? 84 or 64? If I had to choose direction, I mentioned that this is not a $64 geopolitical atmosphere, and we likely return to 84. 84 has been home base. 84 has been home base. Look at 84 here, 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 there, here, here, here. No matter how far it gets away from it, 84. Over here, 84. Over here, 84. We're snapping back to 84s. And right now, we could easily see another move that takes us back to 74, back to 84. If certain headlines come in and we rally to 94, it'll snap back to 84. Not anticipating something beyond 94s right now. As a matter of fact, we have a downward sloping channel. So if some kind of, resolution occurs, then perhaps we could be looking at a drop that takes us briefly into 64s, right? The next 20 could be down, and then we bounce it back up again. So the point is, right now, it is cooler. It continues to honor 84 resistance, and that keeps prices relatively within the lower range of the profile between 74 and 84 as of right now. What could change this would be, say, a failed new low here today. Say we get a rejection and start to push hard through 84s, and now this uptrend remains intact. But 84 is resistance. So at the moment, crude oil currently supportive. But we haven't seen really expansion out of these markets. Here's the NQ, compression. Look at today's narrow range. Today's narrow range, 23% of average. All right, the YM, a little bit more range, 43% by average, but still compressed. RTY, 26% of average and 11 total points. This is almost untradeable compared to a lot of the volatility we've seen lately. So you have to be very, very disciplined about waiting for the extremes, looking to fade the edges, and being reactive, not necessarily predictive at the moment. So let's drop into the lower time frames. The way I would look at this is kind of how we started the week. If this is your previous week's close and we're still there, then the CAM pivots are great. CAM pivots right now will offer the best opportunities at the moment for fading the edges off the weekly CAMs. Also, because we have a rotational digestive market right now, it could be CAMs off the intraday as well. This is what it looks like on the monthly cams. We hit an H5 here, but let's drop this down to the weekly again. Right here, 1 week, boom. By the way, for those of you in PivotBoss Masters, I know that I mentioned in our trading room that our next training will be the last week of August, and the full announcement coming out here shortly. But the last full week of August here, we're going to be hosting the next round of CAM Pro training and CPR Pro training as well. So this has been the perfect market for it. I'm telling you, it's been tremendous. So let's take a look at this let's go down to the hourly time frame. This is kind of a response we got yesterday, by the way, out of CPI, this PPI right now, pretty quiet. Where was it? Somewhere. I'll go back and look. But here's the hourly bar chart right here with your weekly cams. What did we mention to begin the week? Wide cams. And when they're wide, that means likely rotational. That means the previous close is home base. And it means you have to wait for the edges. You know, you get down too far away, then you snap it back to the close. You get too far away, snap it back. You can open up and reveal the inner layers. So the inner layers are right here. And you can see right there, those are the better opportunities right now. So if we were to get up here into that zone here, this is what we talked about, Monday as well. We haven't seen 78 just yet. So if the price gets up here into 7,800 to into H1 at 7,803, it's a fade back to the close. If price drops back to this zone, you probably want to let it get a little bit lower into this low and into L2 and then snap it back this way. So right now, you got to be patient with regards to this week's range and look for new highs, new lows. Here is the NQ. Look at this. That's your previous close, hugging it. Compression at it right now as we do this. The first layers, very nice. First layer rejection, first layer, first layer. Here's your second layer close. Again, you got to let price go find a higher low. Got to let it get beyond these highs. Preferably perhaps here to get down here, or go find L2 and bring it back to this level. So H2, L2 right now from kind of a meteor day trade perspective in the NQ. YM right now, you can see right here, this was a good early rejection yesterday, and that's the one we talked about in our trading room, and that price popped and was about to show another extreme reversal, and right away, within a minute of talking about that extreme reversal, we're swooping to the downside very quickly off that level, hitting the close very quickly, and then going to L1. So you can see the price action here around these levels, but this compression gave us the early idea already to begin the week that it would be rotational and compression would be abundant here this week. So here we go. Again, you got to be patient. Now, one thing to keep an eye on with regards to the YM, if you're trading this intraday, we've had quite a bit of extreme reversals to begin the day. So big pushes to the upside, followed by extreme reversal events back down, and then some. Big pop to the upside, extreme reversal down, and then some. Big pop to the upside, drop already, and then extreme reversal back down. So if we start the day with some sort of pop this morning, do we get another extreme reversal and wiggle our way back down within the range? It's been the norm here quite a bit already over the last week of trading. RTY, very compressed as well, but this one looks a little different, kind of weird price action here. It's getting close to H3 on the weekly cams, and we are at the previous week's high right now as well. So if we bring up your weekly PivotBoss pivots, that's your previous week's high, so you're kind of almost overlapping here between the high and H3, which is a good zone. So I would still be patient and cautious with this one here. A test into 30.75 could lead to a bit of a fade, but got to be watching that. So again, got to be very, very mindful of the trading range atmosphere, the compression, the chop that can abound. I know these are hourly bars, but it just gives you a bit of a bird's eye view of the week, but also of the day. So if we drop down to a 15-minute chart now, and let's shift these over to 1-day cams. These are the daily cams right now. And we'll just read what the auction's telling us here for a moment. The auction's saying 63% narrow width, so compressed. There's adequate enough auction space, so that's important. Even though it's narrow, but it has enough auction space in here to do business. So 920 up here down to about, what is that, 700? That's 220 points of spacing. So that's good and intelligent behavior here out of this engine to be able to say, hey, that's narrow, but the auction space is still good enough to trade. That's awesome to understand. But at the same time, we're not getting a whole lot of price action today. So while there is adequate enough spacing, we're not getting good enough price action just yet. So you have to be patient. And this is where at times, instead of trying to go H3, L3, you want a little bit more meaningful movement to maybe H4 back to the close. L4 back to the close might provide the better opportunities. And yesterday, this was great. I know I got a lot of shout outs and mentions yesterday and notices from folks and traders who mentioned yesterday in the NQ this thing traded so well off of the cams. And you can just see the H4 push up to H5, the H5 reversal back down, and even some of the bounces here. Just really precise price action here. Today, got to be a bit more patient. Let's see, the YM looks a little bit like this. We're currently seeing a test at H4. Now again, H4 here, if we get a break, could lead to that pop into H5 very briefly. Like we said, that first pop to begin the day. And then if that pop happens, it could be a fizzle event back to H4 from H5. So this move could be in play to begin the day. Let's see, ES looks like this right now. You're getting some movement here within the space. One thing I pay attention to is the width here as well. The width between H3, H4 pretty wide today, at least early on. And so when price is auctioning through this space, it's not seeing rejection. So I usually let that play out a bit before I start warming up to any signal or rejections. If it's auctioning through the space, and this is supposed to be a trap zone, then it's finding acceptance a bit. And you have to be mindful now that a failure now through here can open up some weakness, or a push through here, but you got to let it open up a little bit. So again, got to be patient this morning with these markets. Okay. I know some of you are asking for some levels here, or some different charts here. So let's take a look at some of these. CBRS as a stock. CBRS, this is a recent IPO. I have this one in the AI speculative group. And here's my AI speculative group. Some candidates we've reorganized here recently, and I've put some of the speculative candidates into their respective groups. But sometimes some are very, very speculative compared to the group, and you need to let them open up. So here we are in this group here. But I really, really like this rounded bottom. You really like the move on earnings here, where you get a gap up. It pulls back into the gap, holds, and check marks higher. That's really, really bullish price action. It didn't finish with a 125% plus, but it did get 120, so that's not bad. This is a great, great little move here. A really solid breakout move. I like it a lot. In terms of the upside target, because we have this key range right here, you can also probably mark a key range here as well. But that key range would open up this target at 329. 329. One thing we talked about this key range in general when we developed it, we said, whoa, look at this. 160 at the key range low doubles you to this target. And it almost hit the key range low a couple times, but it got in the zone. So it's done a really good job. I like this one a lot. It's in the right industry group. It is newer to the group, obviously, but this is really, really solid potential for a continuation up. I think for this one, key range high into the R25 of that key range, this is a potential trap zone. So if there's any failure to hold 240, we could fall back within the range. So ideally, if it pulls back to 240, it needs to hold and go. I like this one a lot. Another one I like that looks very similar was NBIS. We talked about this one here yesterday in our room, and this one really opened up and closed 34% higher. This one, look at the similarity here with this kind of rounded behavior. Look at the gap up, the pullback, and the forceful push to the upside. What I like about this one here is that all of this compression here after this pullback and then positive reaction to earnings here, really good stuff. This is a forceful day one breakout move. We are gapping a little bit down here, or as of right now, a little bit to begin the day, but any pullback could be a holding opportunity or a retest buying opportunity for a continuation up. If this is a true breakout here that is beginning, this energy could carry over for a massive continuation up. This could be an easy double from, the 200 participants into 400, for example. And when I say easy double, I'm talking 1 to 2 quarters out, although some of these markets can certainly get that much faster. I don't want to oversimplify and say it could be super easy, but we have seen some super easy double, triple, quadruples in 1 quarter. So look at this, from 80 to 160 is a double, to 240 is a triple, and then some. So it can do it. I like this one a lot as well. Big time continuation to the upside. Could be ahead, similar to that CBRS candidate. Let's go to gold. I missed this one here. Oh, by the way, good to see you. Some weakness on gold, intraday perspective. Okay. So typically before I go intraday, at times I like to get the bird's eye view. The bird's eye view, this is the rounded bottom. That's your participation day right there, similar to MBIS. And we got a great breakout right here that is extended. So on that day, we had it as a breakout candidate for a move to 4,500 into the FOMC key level, into that spot. And now that we've hit the target, we've held the last several days. Currently, this is a multi-day compression, so it's up and down within the range. But the directional conviction is up from the short term. The higher time frame is sloping down. So this is a major spot to watch for potential failure here. Everyone forgot to say morning to Coco. You're right. Yes, Coco's right now actually reminding me. Good morning. Good morning. We were hanging out at 5:30 in the morning, so she was and then she went back to sleep. Now she's up again. All right, let's see. Looking at the intraday right now. So we have a bullish short term, longer term kind of downwards channel, but up. So that, to me, when you go intraday, let's bring this bad boy up as here as well, and we'll go week. We'll do this, and then we'll come this way. So here's, for the week here, you're looking at some compression, some back and forth. And for the last several days and, today, up and down, up and down. So this is your auction right now, in my opinion here. You're kind of back and forth within this range. You're trading clearly in this previous close, which is last week's close, into H3, and that's been your range for the week. So you're really just kind of waiting for this low to be taken out, and then you bounce it back, or you're kind of waiting for that high to take out, and you're returning it back. There can be an opportunity to bring it up across the way. Let's take a look at the intraday cams here. Again, why am I using cams so much? Is it because it's a new tool for masters? No. But yes, but no. It's also because we've been rotational, and the cams are perfect for rotational markets. Uh, just look here and just look here, right? You're waiting for price to get into the zone, find some resistance, look at the resistance at 4,500, and then you drop down. Then you wait for it to drop into the zone here until it fails to go lower, and it snaps back, and it just helps set the expectations for where the edges are for the current market. And right now we're starting to see some strength off the lower edge. So there could be a rotation up within the range as we trade within this range here. And when you're rotational, the PivotBoss bands are great as well. You can bring up the weekly bands or the daily bands. And here you have a flat value for the week, which tells you again you're compressed. Look at where R3, H3 is. Sorry, R3. Yeah, it is our H3, but R3, R4 is right here overlapping. And then S3, S4 is right here in L5. So those are some great zones to watch as well. So it gives you an idea on what to look for. Right now, I would say there's a short-term bias to the upside that could play out. And once it gets up here, we may begin to rotate it back down. The one thing I would say, though, this is weekly VWAP sitting at L3. So you know that VWAP can introduce some chop because it is value. It can introduce chop, but it can also bounce off the level as well after some time or take it bid to get to the other side. Maybe right now it's taking it bid. So some thoughts right now on gold. Bank Nifty. Let's go down to view. Yeah, good question. Why use 4-minute time frame and not 5-minute? Each of them are just fine. This goes back to kind of old school trader habits. Floor trader habits from previous floor traders I've had experience with over time, and a lot of times the majority of the market is using a 5-minute chart. And if you're using signals for a 5-minute, everyone's waiting for the end of that bar, for example. Well, if you're using a 4-minute, you may get that opportunity a minute earlier than the crowd, and that's just kind of an early advanced kind of look. Don't always need to use, a 5 minutes just fine. A 4 minutes just fine. So does that make a 3-minute better or a 2-minute or a 1-minute? It's just everyone's can kind of use it how they like and really just use the tools, the approach that fits what they're looking for. And the 4-minute has stuck for me for a while, but you can see I still use a 15 and hourly. Those are standard. Standard times still work especially well on the 15 and hourlies because algorithms and those types of things are built to those specific time frames. So that's why those work great as well. So some thoughts on the 4-minute versus the 5. And then let's take a look here. All right, let's take a look. So looking at the Nifty and Bank Nifty and Gift right now and some of the intraday. I see. Gift Nifty analysis better because daily closing in Nifty is above actual closing in the last 15 minutes to new closing system. I see. Oh, Ganesh, I'm telling you, advanced ADR is incredible. It is one of the simplest tools. Love my ADR. This is the ADR Pro version, which is released a long while back without formal training for our Masters members. We just use it live. But this is just so simplified. Gives you what you need. especially the Pro version with regards to some of the additional stats you can see, so you can really understand the data set and what it means and what it might forecast for the upcoming market. Right now, in terms of Nifty and Gift Nifty, I'll go out. Let's go out to the hourly time frame for a moment here. We've had a downward trend here that's been very noticeable short term. We had a little bit of a rounded behavior here and drop, drop, drop. And then right here, this is very important. So I'm just kind of looking at market structure right now. I mean, I could take everything off the chart at the moment, and you're just kind of lining up, this line, maybe this right here, and then this range below that. You bust through here, you go up to the top of that market structure. So this compression, very, very important right now. You bust through, call it 24,500, and you're opening up a shot at 750 to 800. 750 to 800, just from that view. And additionally, if it fails to push through 500, or you push through 500 and rejects, now the next wave is down. So this level is the major pivot to watch. That's 24.5 just from pure price action here. If we start layering on maybe the weekly cams, let's see where we are on the weekly cams. Yep. It's just so beautiful sometimes where the levels are and how the market responds to those levels. Participation happening at those levels. That's incredible. Yeah, this is going to be nice. If it pushes through here, you're opening up some upside. You reject here and you're back down within the range. So 500 going to be very important there. And let me just look at the down here holding near L4 right now. Okay, I like the simplified approach here. I know it's a little different on Gift Nifty as it is on the actual Nifty here, but through 450 could open up 700, something like that. This is a really, really good little compression to watch for a push to the upside. Let me look at Bank Nifty here, and let me go higher. Yeah, this is okay, for those of you looking at Bank Nifty, this is the range that I posted last time we looked at this, which was last week, I believe. And it's a nice little key range that developed. And then look at the compression we've had since then. We've had compression. That's an energy building phase. That, I would call that kind of a neutral key range where it's building right near the middle of the range, but it's the upper distribution. And this could spark the next breakout move to the 100% target. So that means 60,400 or 53,800 could be next. So if we break to the upside, it looks like that, 60,004. If we fail here, say this fails and we rotate down, 53.8. So use this as the key range. Right now we have this compression. And a lot of times these markets are following oil and AI trade, and I'm talking about the Indian markets in specific, and some of the U.S. market stuff that's happening. And you can see that this compression mirrors a lot of the compression we're seeing right now in the U.S. markets. I mean, this has a real shot to get some big time expansion like the U.S. markets. But is it next week, this week? When do we get it? There's some big time potential here for this one. Okay. Yeah, so good one here by AT here. Do you see candlestick pattern on the 15-minute chart before entering the trade? I love a good 15-minute rejection. I love a good 60-minute rejection. And I'll show you some ways to do it. What I love about, and your question, 15-minute, 60-minute, to me they're the same, right? In terms of, do you enter at the end of the bar, at the beginning of the bar? How do you do it? Every time it's a little bit different, but I love the hourlies because 1 hour's energy can be completely up, 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 up. But like I said yesterday, we weren't anticipating expansion. After CPI, it looked like we were going to see range-bound action. It like the energy was spent within range. So the idea was not that we were going to see a breakout and move. It was if we saw some sort of breakout, we would likely be a fade back within the range. So for this hour to finish, we could be waiting for that hour to finish, and then we're looking for the entry in the next hourly bar for that extreme reversal, and you're in within the hourly move of this bar early. It could be the first 5 minutes, the first 10 minutes, but basically you're trying to enter on that little wick portion. So, or after that wick portion has developed. You know, price opens, it goes up here, it rejects. Okay, now we're going to here and maybe here, etc. Here's where I'll get to your question. If I like an hourly bar like this, I could jump into the 15-minute bar earlier than the crowd and now be looking at the 15-minute bar before the hour changes. And you could use the 15-minute bar. The other thing is, depending on how the 15-minute bar rejects, you can be within that 15-minute bar, or you can wait for the next retest entry. So here we go. For example, this bar is a 15-minute bar. Look at the nice tail. Good rejection. If we bring up the cams, that's at a cam level. Let's see. Let's go 1 day. So if we bring this up, there it is. It hits right into the cam and does this. You see this signal right there. Do you get in now within the bar at some point? That depends on the quality of this rejection and reaction. If you watch this bar and you go bam, and you see the intensity of that rejection intraday, then the rejection could be in and you could be now in that trade intra-bar. If you're not comfortable doing that kind of tape reading or order flow or whatever you're looking at to see that rejection, even just pure price action, then wait for that bar and that signal to finish, and the next bar is the entry, because now you're looking for price to come back up, reject, and now you're in on the inverted check mark move down. So that midpoint becomes a spot to watch. So there's a lot of nuance there that we teach in our trading room and in our masters and in our Swing Trade Pro 2.0 training. Our Swing Trade Pro 2.0 training has swing trade in the name, but it's really blueprints. We're providing blueprints, literal blueprints, for what to do on each of these bars. Each of these bars means something, and there's a follow-up to what they mean. You know, this bar means something, so how you work into that bar, there's kind of a script to it, and the market will follow that script a lot of the time. Sometimes it's just too crazy and it won't. But understanding the flow and how to be in, depending on what the market is doing, takes a little bit of time, but it's very simple once you get the hang of it. You know, if you get a good rejection bar here and you don't want to be in just yet, I call it the retest entry. Let price come into that tail, reject, and now you're in on the retest for a continuation down. So you're literally doing that. And we talk about this in my book, Secrets of a Pivot Boss, as well, written so long ago, man. What is that, 16 years ago? And the concepts still hold up. So not bad. Not bad. And I know we've been going long here, so I'll finish this up with the last couple of questions. Do you take consideration to intraday CPR each day, and your bias for that day is based on it? CPR and the CPR, I call it the market state engine. So it definitely is telling you what the current market state is. Yes. Uh, Let me turn this one off and let me bring, is this one for the day? So for the week, for example, it can tell you the market state for the week. And for the day, it can tell you the market state for the day as well. So right now, overlapping lower value, here it is. It's measuring the pivot width, and right now it's relative, it's narrow. The energy right now is bullish expansion because it's through the mid after taking this closed bid. So it's bullish expansion up at the moment. But there's just a lot of conflicting stuff here. Shift state strong down, but all this other stuff. So when there's conflicting things, that can tell you the market state is rotational. Hold off right now. So absolutely, I'll tend to look at this. But what I tend to do is I look at the chart and then my brain sees it already, and then I'll look over here and it confirms it right now. I know many of you, so this is what I know some of my traders in my trading room say. I've built PivotBoss in a box because this is the way I look at the markets. All of the data sets here that are inside, and then it's designed to give you a reading. Same thing with the auction intelligence engine in the cams, because a certain thing is happening with regards to the width, the spacing, the distance, the shift, all these factors, how price is traded, multiple time frames. It gives you signals that are ideally within the flow of the auction. So it's reading the auction here. So absolutely, yeah, I do. All right. Um, I'm going to leave it there. We did a little bit of Bank Nifty earlier, and if you didn't see that, Chin, uh, you can go back and rewind a bit here. We did do a little bit of Bank Nifty, and it looks like significant compression for major expansion ahead. Right now, rotational for now, but expansion big time over the next 1 to 3 weeks could be ahead. Same thing for these markets in equity futures here. In U.S. markets as well. All right, that was a good long one here. I didn't know we'd be able to get that one off. I was having issues with the YouTube live stream scheduling again for this entire week. Had some minor issues here, but we got it off again. So thank you for joining me. Thank you for your participation. All the chats. Give me some hearts here. Give me some likes, some thumbs up. And again, hit that bell to be notified of live streams when they're happening. You can get the CAM Pro, CPR Pro tools, ADR Pro, all at PivotBoss Masters. One fee to become a Masters member, and all the tools are yours. No future expenses for any of the live training that comes up either. We have another week of live training for Masters members coming up at the end of this month. So it is literally the trader gift that keeps on giving. Everyone, thanks for joining me. I'll see you in the room. Take care.